everybody. Welcome to a brand new episode of Here to Help Gordon Dill with consumer expert Diane Lee. Diane, we got some great topics for you today. In fact, one, I don't know how widespread this is, but you certainly, you bailed out one homeowner big time.
Well, honestly, and that's exactly what we wanted to look into, is how many people were affected, because this was a situation where a homeowner had paid his taxes and unfortunately ended up with a very alarming notice on his house nonetheless.
By now, many of you have already received your property tax bills in the mail, and you may likely know if you're delinquent for too long, you could get a property seizure notice. But when 7 News Here to Help was contacted by a man who had paid and still got that disturbing sign on his home, we looked into how that could happen, and we learned, while it's rare, he was not alone. Imagine coming home to a bright orange sign by your front door, the word "Seize" sparking immediate panic.
I freaked. So I couldn't believe.
Daniel Skull in Taylor says it would be one thing if the wording had been accurate. It states, "We have seized and taken exclusive possession of the above described property this 15th day of October." But in his case, he had already paid his once delinquent taxes online 27 days prior.
Like, I had a panic attack. I'm like, oh my God, I lost a house. I'm like, I paid the taxes. I have the receipt for the taxes. I'm like, what is going on?
The Greenville County Administrator and the tax collector declined an on-camera interview, but 7 News learned the county uses a third-party contractor to deliver the notices to homeowners who are more than 7 months delinquent. Skull says he went to the tax collector's office to explain he never received a bill until late August and paid on September 19th.
Her answer was, well, you're not the only person that this has happened to.
And when you heard that, what did you think?
And when I heard that, that's when I called you.
7 News looked into both the process and what went wrong. Now here's how it works. If you don't pay your taxes, the first delinquency notices go out in April and then another one in May. Now if you haven't paid by September, that's when the county starts scheduling a time to put those seizure notices on the door. Turns out Skull had paid just after the county had given that third-party company its list of delinquent homeowners. 7 News learned there were 2,500 seizure notices that went out this fall, and the county admits 5 were for homeowners like Skull who had already paid. Knowing there were others compelled Skull to do what he has never done before, speak before Greenville County Council.
Now, I am a Gulf War veteran. I suffer from PTSD. When I saw this notice, I had a severe panic attack. I started to cry because I thought that I had lost my house. When I contacted the tax assessor's office, they said, oops.
Greenville County Council Chairman Benton Blunt, sympathetic to Skull's concerns, also looked into why the seizure list wasn't kept up to date. When someone pays their taxes and then almost a month later gets a notice like this, how is that even possible?
I think, again, it just comes down to, unfortunately, in that small time window where he paid it, it was just around the same time that data was prior transferred over to that third party, and it was just one of those that slipped through the cracks.
In your opinion, is that acceptable?
No, I don't think it's acceptable. I think it's, unfortunately, in any business, you're going to have things like that happen, but it's something that we definitely still need to, even if it was one person, if there's anything we can do to tighten up our system to make sure that doesn't happen in the future, I think that we'll look into doing that.
And while that's reassuring to Skull, from now on,
I'm not going to depend on the physical tax bill.
Instead, he says he'll use the county site to look up his tax bill at the start of each new year and pay it on time. Now, we contacted the company that posts those notices, Palmetto Posting, but the owner was not able to respond by tonight.
Okay, I do want to clarify. First of all, the guy kept his house, right?
He did. He completely kept his house, and he had paid he was delinquent. And he says, he unfortunately had been traveling. He didn't see some of the notices. He didn't actually see any of them until August. Whether they came or not is unclear. But normally you would think that the mail would come, that you would get those notices. Sure. Either way, he paid them the minute he saw in August. He paid them within 2 weeks of that notice. And so he had been delinquent, but was no longer delinquent, had paid, and then almost a month later got the big orange sign.
It's It's tough in the mail because like 1% of the stuff that comes in your mailbox is something you even want to bring into your house. It's like 98% garbage in there. So
Right.
it is easy to miss stuff like that.
Yeah.
So let's get through this timeline though. So the taxes were due when
So-
it became delinquent at a certain point.
Exactly. And the timeline is really important. I think that's the general thing that people can take from this story is how the process works. And you want to know that because you don't want to get one of these signs. So
No.
I don't know if you have, Gordon, already, but in November, that's when we start to get our property notices. My husband and I already got ours as far as how much we owe in taxes. And then they give you a good month and a half to pay that. So ours is not due until, I believe it's mid-January. So I believe it's January 15th in Greenville County. And if you do not pay it by that date, then you are considered delinquent, but you do have a window and you will have to pay a little bit of a fine. And that fine gets greater as that window gets larger. So they will send out another reminder again to you in, I believe it was April. And then the county told me they sent another reminder in May. Now, he said he got one in August. So that third reminder, or I should say the second reminder, might come sort of between that May and midsummer time. But again, during that time, you are delinquent. You're accruing some extra fees because of it.
And he paid the extra delinquency fees.
He did. He paid it all.
Okay.
Yes, he actually went down there when he had paid already, and fortunately for him, he paid in a method that is the safest to pay. I think that's another moral of this story is that he paid online and got an immediate notice to his email digitally with the transaction and that he had paid. I think what can be difficult is if you maybe go down in person and pay by check or send it in the mail and the check gets lost and you think you've paid or things like that. That's where things can get tricky. And Gordon, as you know, I just did a story about check fraud and sending checks in the mail. So, checks can go missing. So that can happen as well. So it's much safer if you can to pay online.
So this timeline, let's clarify a little bit further here. So there is a point at which the county says, okay, we've sent notice. It is now delinquent, and they contact some third-party vendor to go and start posting these notices that the house has been seized. And it was in that window of time between when they contacted the vendor and he paid the taxes, right?
Right. And we wouldn't have jumped on this story if that window of time would have been like 5 days or 7 days. But it was, at least for him, it was 27 days. So he paid it in September. And then this notice in early September, and then this notice wasn't posted until mid-October. So he actually paid about mid-September. It was posted mid-October. So he had paid it digitally. There was that digital transaction, so that paper trail there, and got confirmation. And yet 27 days later, they posted the sign with that October 15th date on October 15th saying his house had already been seized. Wow. And that is the wording of the sign. And here's what I should also say to reassure people.
Right. So again, I saw that date on there.
Right.
That was posted on there's the sign.
Yeah.
Posted on the 15th that it was seized today.
Exactly, that it was seized on that day. Now, that is the wording of how the seizure document is. It doesn't necessarily mean they're taking possession of the home on that day. You then have a window of time afterwards. So from the date that it's posted, you basically have until, I believe, the end of the month to pay, October 31st, to pay the taxes. If you do not pay it by then it does go into the delinquent sale, which is usually like around November 2nd of every year. Okay. And then you could lose your home.
Yeah, honestly, I mean, I'm not a veteran. I don't have PTSD like the fella in your story, but I think I'd about have a heart attack if I saw something like that on my front door for the same reason. Oh my gosh, I've made all these payments on my house and now I'm going to lose everything I have. I mean, it's terrifying.
Yeah, and the reason why he called us too is because he was told by the county, and he was told accurately, that he wasn't the only one. Now, there's not a ton of people that this has happened to, but we did confirm there were at least 5 in this round that happened to. And so the question is, in a day and age when you have the ability to, quickly inform people through many types of communications that we have, and you quickly update data, should this error even occur for one person?
I mean, probably not. I think the number you had in your story was like 5 out of 2,500 were people who had already
small
paid.
Percentage, yeah.
So let's get into the resolution of this then. Was it as simple as him calling and saying, hey, I've got a receipt for this, or were there extra steps for him to get this resolved?
Yeah, so he went down to the tax collector's office and he did show the receipt, and it was as simple as that at getting this resolved. But that is also where he learned that it happened to other people. And, and that's why he advocated for himself and spoke before the council. It's just one of those situations where you believe in this day and age that maybe this shouldn't happen. The other thing that he learned from it, and I think this is important, Gordon, is that there is a way around this. Like, first of all, we all have to be responsible for making sure we're getting the notices of how much we owe in taxes and paying on time, right? But if you do happen to miss mail, you can go be proactive. You can check the county site. And Gordon, I think we have an example of the Greenville County site.
To your point, Diane, you owe taxes, right?
Right. You owe taxes.
Right.
So if you scroll down, this is just the tax collector site, a typical county site. This is Greenville County. And it says search tax records or pay taxes online. So you can do both. You can search tax records, but what you would want to do if you want to pay is pay taxes online. So we would probably press that link down there. Okay. And then you would need to know a few details. Obviously, you need to agree that you are, using it for purposes. And so you would select either your vehicle, if you want to pay your vehicle tax, or your real estate. So if you scroll back up, you'll see real estate. And when you pick real estate, that's where you need to know a few things in order to make this possible. So you would need to know your tax map number, which is identifying your property, and obviously you'd have your first and last name and your address. So, so you can create that account and pay online, and it makes it a little bit easier.
It's definitely easier, although again, that timing really matters. It's also confusing, I think, for people. Like my mortgage takes the tax money out and puts it in an escrow account, right? And I think that happens to a lot of people who have a 15 or a 30-year mortgage still on their house. So they probably aren't even aware that they may see the notice in the mail, but aren't seeing that bill get paid because that's coming directly out of the mortgage escrow.
Yeah, actually, it's really interesting you mentioned that because, I take so many different viewer calls, and there was one viewer issue where the mortgage had been sold to a different company and the paperwork didn't transfer properly, and they no longer were taking that money in escrow and paying the taxes with it. So you do have to just stay on top of it.
Yeah,
exactly.
All right, Diane, first of all, the bottom line here, I don't know if we know about the other 4 people this happened to, but at least this one gentleman, this Iraq War veteran, he's paid his taxes, he's keeping his house.
Thank goodness for that.
It's very good news. We're going to come back with some great money-saving tips and ways to keep yourself financially savvy after we take a quick break. And welcome back. We are still here to help Gordon Dill with our consumer expert, Diane Lee. Diane, maybe one thing that determines more in our lives than we even imagine, not just what we buy and sell, but things like employment and housing, our credit score.
Yeah, so important. So the big question is, how can you get the best score possible? Well, we've got some details at least that will help you understand how those scores are put together in the first place.
Do you know your credit score? It sure can make a difference when you need to borrow money, but many are clueless about what really impacts that all-important 3-digit number. I'm 7 News consumer anchor Diane Lee, setting the record straight with credit score truths and myths. It's not simply qualifying for a home or car loan that makes a credit score so important. That number impacts insurance rates, utility deposits, even your ability to rent an apartment. But when it comes to credit,
Mom always told me growing up, if you can't pay with cash, you don't need it.
Many consumers don't know what impacts their score.
They say, can we check your score? It's not going to harm your score at all. And I always say, yeah. And I never know if they're actually telling the truth or not.
Well, let's find out. Truth or myth? Companies can check your credit score without affecting the number.
Short answer, fact.
As a mortgage loan expert, Andrew Evans is well versed in what impacts credit scores. He says companies can do what's called a soft pull, a preliminary credit check that has no impact on your score. A hard pull needed for loan approvals can lower your score, especially at places like dealerships that may send out multiple inquiries all at once.
I've had clients that have got a new car loan and they got 14 different credit inquiries from different companies, and it does pull their credit score down.
Evans says to get around that, seek financing instead through your bank or credit union. So what about if you check your credit score?
You checking your own credit score does not impact your score.
False. It does affect my credit score.
It does not. It's true.
It does not.
No.
I've always been told that if I check my own credit score, it affects my credit score. That's not true?
That is not true.
Now, when it comes to how credit cards impact your score, there's a lot of misconceptions.
If you have an old credit card, should you close it?
Yes.
And why is that?
I have no idea.
Good guess. But not correct, unfortunately, because if you have an old credit card, you've established credit history, and that history is important for your score. Does that make sense?
Yes, that totally makes sense.
The truth is, how long you've had the credit impacts 15% of your score.
Another myth, not having a credit card can lead to a better credit score. In fact, 10% of your credit score is tied to having diverse types of credit, from auto loans to mortgages, and yes, revolving accounts like a credit card.
And then there's a key concept that accounts for 30% of your score, credit utilization ratio. Jared Kelly with Spiro Financial Credit Union says it has to do with credit card limits. So we asked, truth or myth, a higher card limit helps your score?
That is a fact, and here's why. Because typically, you're looking at the ratio of balance owed to the maximum limit that you could have on that card.
The aim is less than 30%. So if your monthly balance is $3,000 and your limit jumps from $10,000 to $15,000, your ratio drops from 30% to 20% and your score goes up.
You're doing math here on me, and math is hard. Now stop it.
Moving along, truth or myth, once debt is paid, it no longer impacts your score.
Do you feel like that goes off your credit report?
Actually, no.
How do you know that?
Because I've had something happen where I paid my car off, and it actually dropped my score when I paid the car off.
Yep, most paid off debt remains on your report for 7 to 10 years. And finally, for all you married couples, truth or myth, lenders will only use the best score.
That used to be years ago, but no longer. Whichever spouse has the lowest credit score, if they're going to be on the application, we have to create the entire loan program based around the lower credit score. Doesn't seem fair, but it's just the way the rules are.
Now, the best way to get started on raising your score is to get your free credit report so you can check for any errors and see where you can improve.
You know, I know you're not doing gotcha with man on the street interviews, but boy, it's tough. People don't know how credit scores work, Diane.
Yeah.
They have no idea.
I felt like I was one of those reporters asking people like history questions,
Right.
you know? No, and not to blame anyone. It is, it's one of those things like we just don't talk about with our families too, which many times we should, but we don't talk about finances a lot.
So let's start at the very beginning. The fella who thought checking his own credit score was going to lower his credit score. For instance, my checking account, the bank I bank with, will actually send me notices. Hey, your credit score is ready to be looked at. There's a lot of free ways to do it. In fact, I think there's direct online ways that we can check our own credit score, right?
Yes, there is. And I would say that still is the number one myth, because I think so many of us were told, when we started to work with our own finances, like, oh, don't check that score. When you check the score, it could affect. And there's that we misconstrue that between like a company doing a hard pull and yourself. But yes, Gordon, banks now, many banks and credit cards offer this service where you can do that soft pull for free. That's you checking your own score. And that can be extremely useful.
In fact, we have a website over here. It's called annualcreditreport.com.
Yeah.
Tell me about this.
This is such a useful website, and this is the legit one, guys. So this is there are some scam sites out there, but this allows you.
The address right here at the top.
Yeah,
right?
annualcreditreport.com. If you scroll there, you can get your request your free credit report, and that's from all three agencies. You can see on the right-hand side, that's TransUnion, Equifax, and Experian. Those are all three of the credit reporting agencies, and you can get those free credit reports as well as use this site to be able to reach out to those organizations and potentially get those credit scores.
I mean, this is maybe the most helpful thing, because there are so many people who have no idea what their credit score is. And as you know from all the reporting you've done over these years, Diane, that credit score is used in ways you probably haven't even imagined.
Yeah, and that's the thing that I think we're not told when we're younger, is that even if you want to rent an apartment, a credit score a good credit score is necessary sometimes in order for you to get approved to even move into that apartment.
That's right.
So it really makes a huge difference. And certainly, as far as the interest rate that you're going to be offered on a car loan or a home loan, it makes all the difference. So it's really important for you to know how it works. The credit reports obviously are different, I should note, than the credit scores themselves. So what the credit reports will show you is what loans do you have outstanding, and they're really important to know because there could be some errors there, or you could be associated with accounts that you're actually never signed up for. So keeping on top of that is essential. And then separately from that, the credit scores, which the credit reports affect, right? What's on the credit reports affects the credit scores, but the credit scores themselves are what these financial institutions will need. And I should note, sometimes your scores can be different depending on which agency you check with. So TransUnion could have a slightly different score than Experian. It's just sort of how they do their algorithms.
Do the lenders use a particular one of those?
They may choose to use just one, or they may use multiple. Okay. It obviously does cost them every time that they do these search, which is usually passed on to the customer somehow. So they may not use all three, but if they use one and you want them to use a different one, you should say, I think I've checked it on this recently, and I think you should check that one too. You could advocate for yourself in that way.
I will tell you, if for nothing else, you're right about checking for inaccuracies in your credit report. Like my father and my grandfather have the same name as me. And I found credit card accounts that they had opened but were on my credit report.
Wow.
Now, I mean, they were paying them, so it actually helped their credit. But the point being, it's very easy for these agencies to make mistakes.
Yeah.
The Social Security number is one digit off. The home address is one digit off. The name is slightly different. It is so crucial to go through that and double check literally everything on your credit report.
It really is. Mix-ups like that, and also potential scams that you can avoid too if you can catch those things that come on your credit report. I also always advocate, and I have to say it again, for freezing your credit with all three credit reporting agencies.
Mine's frozen too.
Yeah, if you do not need to take out a loan anytime soon.
Absolutely, because that is the ultimate scam bulletproofing. If you can't do it 100%, but nothing works better than freezing your credit reports.
Right. So I have to ask you, Gordon, out of all the myths versus truths, what was sort of the most surprising to you?
That's a good question. I guess I didn't know the difference between hard and soft pulls on my credit. I assumed that if I went and applied for anything ever, that if they checked my credit score, any lender checked my credit score, that was going to ding me and pull it down. So I guess I am surprised to know that that's not always the case.
That was the whole motivation for the story. Our news director sent it to me and said, I've been seeing all these ads in my email inbox saying that they can do this soft pull, or they didn't even use the word soft pull. They can check my credit and it's not going to affect it at all. Is it true? So that's why we've started to look into it. So you're not alone in that. In fact, I will share this one cautionary tale that was mentioned in the story, but yes, these companies definitely can do these soft pulls, but you have to make sure it's a soft pull. And I would watch out for dealerships because under the situation that I mentioned in the story, there was one individual who went to a dealership and said, you don't even need to pull my credit. And they said, oh, no, it's just a soft pull. And it ended up being a hard pull and multiple hard pulls because it was like
14 of them?
One button went to 14. Yes. And so you just have to make sure that it's an institution that you think really make sure that it's not a hard pull.
You may not know the answer to this, but 14 hard pulls on the credit. How much does that ding a person's credit score? Do you have any idea?
He said it was notable. Okay. I don't know like a specific number of points that it would go down. The good news is he said he had excellent credit to start with, and it didn't hurt him too much. But when you have multiple inquiries, they don't last forever, but they'll stay there for like a couple months. So if you're usually you would have multiple inquiries because you're wanting to take out a loan for something like a car. So that's a bad time for your credit score to go down.
Yeah, and as for people maybe less familiar with this, although we've all borrowed money at some point, whether it's your credit card or your car loan, maybe you got a mortgage. When your credit score goes lower, it indicates you've had trouble maybe paying a bill in the past, but the thing that really handicaps you is it jacks up what you're going to pay for that next loan. They see you as a higher risk, and therefore they're going to charge you more to borrow the money. The interest rate goes up. So it's actually really expensive to not pay attention to your credit score.
Yeah, it is. And I'll tell you, the one thing that surprised me the most was the marriage situation there. So I had assumed that when you had a credit score and your spouse had a credit score, that maybe they would take some sort of like a add them up and take the mean or the,
Sure.
but no, it's actually the person with the lowest credit score that they use, but now they have to do it that way. So before you get married, ask your to-be spouse
check
what
the
their credit score is.
on the way to the wedding. I wonder
Yeah.
about that, Diane. Would you say, let's say, for the sake of argument, my credit score is higher than my wife's.
Mm-hmm.
Would it make sense then for me to just to borrow the money on behalf of the family and not put her on the application?
It would under this circumstance that you can cover things like the down payment and all of those expenditures.
I see.
So
I guess if her income is necessary to qualify for the loan.
And the income, exactly. So it might be easier to do that on a car, but if you're going to buy a house, you might need those two incomes to prove that you guys can cover that.
Yeah, and she also wants her name on the house.
Well, of course, we all do, of course, and we deserve it.
She does deserve it. That's absolutely true. Diane, any final thoughts on this credit score myths versus fact? Were you surprised how little people knew?
Definitely. Well, yes and no, because finances, again, we all need to talk about them more, but none of us do. So I'm hoping that stories like this really get people kind of thinking and looking into being proactive. But I've said it before and I'll say it again, knowledge is power.
It sure is. All right, that's Diane Lee. I'm Gordon Dill, and we are always here to help. We'll see you next week with another new episode.